Bang, what is up, folks, and welcome back to another edition of the Daily Crypto Byte. Today is Thursday, October 21st, and you need to look no further than Doc's name today to see that we are getting some very nice price action here. Plenty to talk about as both Bitcoin and ETH continue to rip. As expected, the alts are underperforming a little bit, but still some nice pops. Got to give both Doc and CJ some props here this morning because you guys have been, picking Solana as your Doge of the day all week. That thing is absolutely ripping over the last 72 hours. So props to you guys for that pick. But plenty of other alts to take a look at now that we're showing some new strength. Plenty of interesting stuff happening this week as well. So very excited about today's episode. But before we dive into it, John, CJ, how are you gentlemen doing today?
Doing great. Love all the people who have not traded crypto that keep calling it a Ponzi scheme. You just don't understand. Those people just don't understand. I'm not saying everybody has to be in. If you don't understand it, maybe you should stay away. If you can't even understand the basics of it, and I'm not trying to belittle anybody, Monty and CJ. I didn't understand things in 2016, which is why I flipped in and out at 300 and 600 bucks. I wish I had those coins back. But as I learned, which didn't take that long, then I understood and I was comfortable with what I was doing in 2017. But it's amazing. It's not so much the fear of missing out, the FOMO. It's more of a, maybe we should call it JOMO or something. It's like jealousy of missing out. I think we might have to coin that one, guys.
Tomorrow you'll be joining the show as Dr. Jomo. So,
Dr. Jomo.
There we go. But,
I'm going to use that one on Twitter to all the haters.
CJ, how are you doing, my friend?
Oh, I'm doing great. And I mean, the ignorance that John kind of points out, I mean, it was so much more prevalent back in like 2016, 2017, 2018. So back then, I just try to take it with a grain of salt and say, hey, these people are probably going to be buyers down the road at some point. So, it's not a bad thing. And I think that is still true to this day. So,
by the way, CJ, have you heard, because I know you like the Orange Pill podcast with Max and Stacy, Max Kaiser, Stacy Herbert. If you guys hear this or whatever, salute to you. Max used to, every day that he was doing his show, he'd send me something, CJ, about, I told Doc to buy this when it was $100. And yeah, he did. But I didn't. But luckily I did finally listen to Max and Stacy and to Peter Brigger, as I've said before. But there's a couple phrases they always throw out, like enjoy being poor if you don't decide to take that orange pill. And he's, of course, referring to the Matrix, I guess, where you have the red pill and the blue pill or whatever, green pill. I can't remember the colors. I'm red, green, colorblind anyway. I would have taken them both. So that's the difference between me and Keanu Reeves, that and maybe a lot of hair. But I think a lot of folks that have missed out and so forth do have that jealousy factor, CJ, and I think they try to project onto this something about tulips, of course, or whatever else. Even though, of course, we weren't talking about hundreds of millions of people in that tulip bulb crisis mania. We were talking about a relatively large number of people that lived in Denmark. People, we weren't talking about the whole globe was just going crazy about it. This is a global thing. And, even where they make it difficult, like in Korea, or nearly impossible, like in China, there are still owners and people that want to own for a whole variety of reasons, not the least of which is, of course, that they can maybe keep the prying eyes of the government out of their investments. And that's a good thing.
Oh, yeah. And yesterday we did a sales webinar at Market Close, and we had a ton of people come in that were new to crypto, wanting to learn about it. And John, I think you did a great job of kind of explaining how there are a lot of overlaps between, crypto trading and traditional equity trading. And although there are some initial hurdles you need to overcome, some things that, are unique to Bitcoin and unique to crypto, some things like on-chain metrics and learning how to do that sort of analysis. But for the most part, some of the most successful people in our crypto trading room have been, traditional equity traders. So if you're someone that was at that sales webinar last night and watching this show for the first time, welcome. I hope you're enjoying your time in the crypto room, but it's a very exciting time here. Hopefully you're not getting hit too hard with that JOMO that John was talking about, but I still think there's a lot of tremendous potential upside here in Q4. CJ, you did a great job last night kind of highlighting some Q4 prospects, what we've seen Q4 historically, and kind of laid that out nicely on the charts. Anything you're seeing today in Bitcoin in terms of that Q4 outlook?
Yes, and I'll start by saying that I have had JOMO in the past with assets like Doge and Sheep. You can't catch them all. It happens, but that jealousy feeling does somewhat resonate. It's kind of just part of the game. But let's get on to Bitcoin. So, we have a very nice trend, very strong divergence from the moving average. And I keep going back to how price behaved when we first saw similar price action when we created that new all-time high above 19K and then went up to about 30K as well. We see that same very strong and far divergence above the 20 smooth moving average. And in many instances, price will come back and touch that level. Now, I'm not saying we go all the way to 53K or whatnot. All that I'm saying is that the more open interest kind of gets generated and the more leverage that kind of comes into the market as the trend gets stronger, the greater the risk that we have some type of liquidation event where price falls off about $5,000. And obviously that would not be detrimental to the macro trend. I actually think it would be quite healthy at this point to experience something like that, but we're not seeing it just yet. Something that I thought was very interesting has to do with long-term holders and how we look at their profit and loss within the marketplace. And we can identify areas of accumulation and distribution from looking at this graph. And you can see the Bitcoin price highlighted in black here, and we can see the long-term holders and where they like to take profit when we see these spikes in the orange line here. And so all throughout 2017, during that bull market, the long-term holders who had accumulated back in the early 2015, 2016 bear market, they were starting to take a little bit of profit here as we ascended. And that's when Bitcoin started to see those 30% corrections, every 5 or 6 weeks. Not saying we're going to do the exact same thing, but it wouldn't surprise me if we saw some instances of profit taking now that that profit or that unrealized profit is starting to increase and go back up into this zone. You also saw this at the start of our recent rally when we really went into 20K, 40K, and then 60K earlier in 2020 and 2021. So this is quite normal for bull markets. This is something that we typically see spike, and it doesn't mean that it's an automatic sell signal. All that it means is that the longer term holders are probably going to start thinking about taking a little bit of profit because they are up quite a bit on their positions. So just wanted to kind of highlight that. I know it's a very exuberant week with all-time highs and whatnot, but I just wanted to kind of try to present another side of reality there.
Yeah, and Doc, you hit on this last night. One thing that is very important to watch is the retail participation in the space, particularly the amount of retail leverage that we see in this space. Right now, it does seem like the majority of this price action is still being bolstered by those whales and institutions. Also, you have, the new avenues of exposure with BITO trading. I don't necessarily think the retail crowd is all the way in yet, but I agree with CJ that now we need to be cautious that we're entering into this uncharted territory. Historically, this is when we start to see those liquidations that really can drive price down. We saw at the start of September when we had that retail exuberance. Hopefully retail traders are a bit more cautious now as they, head into this second half of the market cycle here.
And we're seeing that coin ETF, the ETF BITO that Monty just mentioned. That's the ProShares Bitcoin strategy ETF. And I guess one of the reasons they call it a strategy is because they are indeed, as we've said from the very beginning, buying the futures that trade at the CME, because that's the only way they could get it approved. The futures had been trading for 4 years, roughly, and options on it for nearly that long over at the CME. And so the reason the SEC finally approved an exchange traded fund was it was based on a CFTC approved product, much like Spider, for instance, SPY versus the S&P 500 futures that had traded at the Mercantile Exchange for years. But I still really go back, guys, to this idea that these futures are going to have to be rolled, and they're not going to be able to be very slick about it because, again, they have an obligation under the terms, even though they say actively traded. If you read the document for ProShares, the offering document, it will say this is an actively managed. So, but if they lifted a leg, meaning that they sold the front month in order to buy the next month out, or if they bought the out month and then we're going to try to sell the front month, in either case, they are going against their terms of operation of that fund. It is an exchange traded fund, ETF, and they had to describe what they would do. They say they're going to buy, the futures and then roll out to the other futures contract and so forth. But if you buy out here, now you're double long because you're already long here. You buy out here, all of a sudden that becomes a 2x. So that's a real problem for them because they're not disclosing that they are a double or a levered product. So I think this will be very transparent when they're making these moves because, it's already $1 billion. It got to $1 billion very fast. And it's traded nearly 5 million shares already today. Just 43 minutes into the trading day, it's traded 4.8 million BTO. I still think people should just, drop the $395, folks, and subscribe to CJ and Monty's course because that $395 is going to be eaten up many times over if you buy any meaningful amount of this ProShares product. Because again, 0.9%, nearly 1% of all of the money you put into that fund is going to go to ProShares. Then that roll that I described, getting out of the short term, buying whatever future out in the future, is going to cost them money as well. You could save yourself a ton of money. I mean, just think if you had, for instance, a $50,000 account. Anybody want to guess what 1% of $50,000 is? Anybody? $500, folks. So if you have $50,000 worth of this ProShares ETF, and it has a 1% management fee approximately. I know it's 0.9%, so it's actually $450. But the course is $395 right now. You would be crazy not to understand how to open your own wallet, how to handle cold storage, hot storage, or in other words, and trade on lit markets versus wherever you want to trade futures and all that kind of stuff. Why would you not do that? And you can do it just by going to, marketrebellion.com/try crypto. I would highly recommend it.
Yeah, thanks, John. And I think, that's a great example of kind of, people's willingness to take on that 1% fee, I think speaks to their kind of intimidation with crypto and their unwillingness to get their hands dirty, dive in. But
Yep.
like I said last night, I think a lot of that initial barrier to entry is psychological. I think if you, come in the room, chat with some other traders, just start looking at the charts, you'll realize that, it is not as complicated as you might think. There are a lot of overlaps with traditional equities. And really, if you just spend a little bit of time learning about it, it will go a very long way. So yeah, I agree with Doc. I think, come into the room, dip your toe in the water, learn a little bit about crypto, and then start trading. That's definitely the way to go. So well said, Doc. But it's about that time, folks. Any Doges of the day today?
I'll tell you what I'm watching, and I've traded it a little, and I've never traded this one before. OMG Network. OMG. OMG network, guys. The volume has surged 156% in the last 24 hours. That'll catch my eye. And it, should catch yours too. Doesn't mean that you should invest. I'm not your financial advisor, but I'm saying that when something moves like this and gets that much investment interest, it's got a market cap right now of $2 billion. Fully diluted market cap, a little bit more than that, 2.089 billion or something like that. Circulating supply, 140 million coins. Trading $14.92. It's already been between $14.34 today and $15.99. I'd keep an eye on it. If you're somebody who's never traded one of these kind of altcoins, then, again, be careful. We're trying to stress that, this is not a time for FOMO and so forth, folks. But you can trade it on Binance. You can trade it on Coinbase. You could trade it on FTX, Hubei. I can never pronounce that one. But you can trade it on several exchanges. Take a look. OMG is the symbol.
Also available on Voyager. Don't forget.
Nice.
I do believe they are offering, I think, 1 or 2% interest on OMG, but I really like OMG as well because it's one of the layer 2 scaling solutions that has actually hung around and trended pretty well with Ethereum and the broader markets. So I definitely agree with that. Keep an eye on OMG as we go into the end of the year here because it is one of the layer 2s that is unusually stood out. But Monty, how about you, sir?
Yeah, I like that pick. CJ, it's funny because I know you've been watching OMG this week as well, so not surprised that great minds are thinking alike here. But let me go ahead and dive into my Doge of the day here. And I was chatting about this particular asset, AVAX, last night in the room with Mr. Eric Helmuth. I believe he's in the chat right now. But one thing that, was, I think, really, most interesting about AVAX, one is obviously, its relationship with the rest of the crypto market. If you look at what drove this historically, it's been on the back of intense ETH speculation and also, on-chain activity for Ethereum. Now we're seeing a very similar thing. As Doc's name implies, ETH is ripping up to its previous all-time high, looking very strong, and AVAX is lagging behind a little bit. Now, one thing that is encouraging is that during this consolidation period, we saw this kind of declining bearish volume. I was a bit, worried about this critical level of about $50. But as you can see, the volume was declining, implying that sellers were kind of, being shaken out of this market. There was less and less sell pressure as we kind of consolidated here, heading into the middle of October. Now we're seeing a slight uptick in volume, and I'm overall encouraged by the price action we're seeing with ETH, the price action we're seeing with Bitcoin, and just the overall timing of this market cycle right now. So AVAX still about $18 off its previous all-time high. I think it could potentially make that move to the previous all-time high at around $80 pretty quickly here. So I went ahead last night while I was talking with Eric and made the goal of entering a trade here if we get a nice clean close above $61, and we are hanging out right at that level at about 61.5. We'll see how today's candle closes, and we'll see how ETH finishes up the day. But overall, I think AVAX is well poised to have a very strong close of the year here. So that is my Doge of the day. But I'll pass it over to you, CJ.
Thank you for that, Monty. Definitely holding a bit of AVAX as well. Love Avalanche and the project as a collective. But I want to talk a little bit about trading style as opposed to just one particular asset. And CEO and CIO of Three Arrows Capital said this yesterday, and I thought it really resonated with me because I've very often been of the mindset of like buy high and sell higher in trending markets. And so this tweet here reads, the best kept secret in trading is that far more money has been made buying new highs than any other type of strategy, and it's not even close. I think that the only free lunch in markets, so to speak, is disciplined trend following. And so therefore, I've been looking at the weekly chart and looking at a lot of these altcoin assets that are at or very close to their all-time highs. And like I said earlier in the start of the show, we could see a little bit of a liquidation event in Bitcoin that could take us down about $5,000. That would definitely hurt the alts and leave a little bit of a selling cascade in the midst. Nonetheless, the broader weekly trend on a lot of these altcoins is very strong in my mind and fits that motto of buy high to sell higher, as opposed to just buy low and sell high. It can be very, very difficult to buy low and sell high. It's easier, in my opinion, to go with the trend. So DOT is one of those that I think is very close to making new all-time highs. HBAR is another one. Monty did a great breakdown and a trade insight on HBAR just a few days ago. Luna is another one. We're going to continue to focus on a lot of these very strong and resilient altcoins that have led the charge and are near to breaking new all-time highs. I'll recap AVAX as well from the weekly chart, although Monty covered it. This is something that is not showing really any weakness thus far. So those are the type of assets that I'm looking at and things that I want to buy in the altcoin market.
Awesome, CJ. Clearly, there's lots to watch here as many assets are approaching previous all-time highs. And yeah, I love that tweet. Very well said. There is this psychological difficulty in buying all-time highs, but it has historically paid off, especially when you take into context the entire market cycle. So thank you for that, CJ. That was some great picks there. But as always, thank you guys so much for watching. We will be hanging out in the crypto room. Like Doc said, we're there about 24/7. And if you'd like to hang out with CJ, myself, and a global community of traders that share their insights as well, head over to marketrebellion.com/trycrypto. Like CJ said, we publish actionable trade insights. We had one on HBAR just 2 days ago. CJ published one on Sol as well. That is really ripping to the upside. So love to see it. We also have a pro charting service, which we just showcased. We have new cutting edge sentiment data. Very excited about that. We're actually going to be dropping a course on sentiment data at the end of the month. And that's available in our education curriculum, also available to members of our community. So head over there and check that out. And if you're looking for a place to trade your crypto, we recommend you head over to investvoyager.com. We can trade 60 plus assets and get up to 12% interest on assets like DOT, which CJ was just showcasing, and also 10% on assets like USDC, a stable coin. So if you head over there, use code REBEL25 when you sign up for $25 free in crypto. But that's all we got for today. Thank you guys so much for watching. We'll be back again tomorrow with another episode of the Daily Crypto Byte. Have a great rest of your day and take care.